Hi there and welcome to this week's Art of Procurement show, and I'm the host, Philip Ideson. And joining me today on the show is Pierre Lapree. Pierre founded Per Angusta, a procurement project pipeline and performance tracking tool, over 4 years ago, following a career within IT and then procurement, mostly at the staffing firm Adecco. And for regular listeners, you might actually recall that Pierre was previously one of our revolutionaries at the Procurement Revolution event that I co-founded and co-hosted last year with Kelly Barner. And today, Pierre and I actually talk all about the savings process. So specifically, what are the actions that we can take to bring trust, transparency, and consistency to the savings tracking process? It's widely reported that CFOs neither trust our reported numbers nor see the majority of our claim savings dropping to the bottom line. So what can we do to actually bridge the gap? Listen in as Pierre and I discuss the best practices that we have both observed and implemented throughout our careers, both as practitioners and as service providers.
Welcome to the Art of Procurement podcast with your host, Philip Ideson. Here, thought leaders share the trends, strategies, and tactics that you can use to elevate the role of procurement and your career.
Hey everybody, and welcome to today's episode of The Art of Procurement. I am delighted to be joined today by Pierre Lapree. So Pierre, welcome to the show.
Hi, Philip. Thanks for having me.
No, you're welcome. I'm glad that you could join me. And I talked a little bit about your background in the introduction, but how did you come to work in procurement?
Actually, by accident.
Yeah.
No, I'm coming from a background of IT project management. And I was actually hired by the CPO of my company because I knew IT. And he thought it would be very important to actually be able to discuss and challenge suppliers based on real knowledge and not preconceived ideas. And clearly he said that he needed someone familiar with IT and that procurement would come after that. And actually he was right. I could learn a lot of things about procurement later on. I really come from I would say an expert background.
Right.
This is how I got into procurement. And I think it's important that we know what we buy.
Yeah, and that's actually really interesting you say that because, I actually did a webinar a few days ago, and one of the things I was talking about was procurement and the talent in procurement and finding talent. And one of the challenges that CPOs have is finding the right people on a category basis that have the soft skills and have the market expertise or the category expertise. And so they're starting to look outside of the profession to domain experts. So bringing people in from IT, bringing people in from marketing. Did you feel that not having the procurement background hindered you in any way, or was it a relatively straightforward learning curve when you came into procurement?
Clearly, I learned a lot of things, but we are doing a job based mostly on soft skills.
Mm-hmm.
We need to be easy and happy with dealing with people because all of that is just relationship. So there are a few tips and tricks, and you need to learn your 7-step sourcing process. You need to learn all these kind of things, but that's relatively straightforward. And again, this is just applying a frame around the conversation. So I really believe that being expert helps, but I'm also absolutely 100% sure that you cannot know everything about what you're buying, and that's especially true in indirect procurement. Mm-hmm. I've purchased so many different things when I left IT. The key here is to be able to ask relevant questions, and listen, both to your supplier and to your stakeholder. And this is how you get to understand, and then you apply an analytic mind.
Right.
Try and find the right levers to pull and get the best results for everyone.
So did you find that, so you came into procurement managing IT, the IT category, having background in IT. Did you find then when you transitioned into other categories that stakeholders treated you in a different way because you didn't have background in their category versus the IT stakeholders connected with you when you were managing the IT category?
It takes a bit of humility, I would say, to enter the room with your stakeholder and say, okay, I'm not very good at your subject, but teach me, help me. And by doing so, you're just actually giving some value to your stakeholder, and usually they like that. And after that, well, the conversation gets started, and very soon you manage to split the roles, and you need to understand just enough to be able to ask the right question to the supplier. But when things get too technical, then it's also your responsibility to be able to turn to your stakeholder and make sure that what you're buying makes sense also from the functional standpoint.
Right.
So I would say, again, soft skills, humility.
So you had your time in procurement, and I guess that you found some challenges that really motivated you to found your company, Per Angusta. I was interested in what those challenges were that you came up against that you thought, there has to be a better way of doing things.
Yeah, exactly. So the main challenge I found when I was in procurement was that we had to exist as a function. My company bought possibly 4-5% of the overall turnover. So procurement was clearly not a priority, and we had to become one. So we had to find ways to again exist and be considered by our stakeholder, by the management. And we realized that we had, as a function, to mature, to get more structured, more professional. And that involved a lot of methodology. But that was just a part of the equation. Being good at what we do was the first part. The other part was communicating the value we brought to the company.
Yeah.
And I know this is not necessarily what most of people think or write in the profession today, but savings are a thing. If you bring savings to your CFO, if you bring savings to a stakeholder so that they can do more with the same budget, they will like it. And I'm going even a step further. I truly believe that a procurement function that does not help contain or reduce cost, it has no reason to be there. This is what we do. We have to do a lot of other things like managing risks, trying to bring innovation. But if we don't deliver some form of cost reduction under whatever form we can think of, we don't need to be there.
And so that's the table stakes.
Yeah, exactly. And this is a surprisingly efficient way of doing more with your stakeholder. I recall a few instances where we had some, not the greatest relationship with some stakeholders, but we helped them save a lot of money. And the next time, they went to us expecting more money. But this time, we brought additional things, like things they did not think about, or mitigating a risk that they did not anticipate, and that actually materialized.
Right.
So we could get out of the situation without any problem. And this is how you actually build the relationship, by bringing first money, then risk management, then innovation. And this is where you start finding better ways to collaborate and go beyond savings. And everybody talks about innovation and supplier collaboration. You cannot do that if you are not aligned with your stakeholder in the first place.
Yeah.
So
when you talk savings, are you thinking hard dollar savings that you have a purchase price A versus purchase price B and it's the difference? Are you thinking softer savings where you're negotiating maybe quotations down, or you're negotiating away price increases? Or are there other things that you can put a monetary value on to demonstrate the value that we're bringing? What are you thinking of when you talk about savings?
Usually beauty is in the eye of the beholder.
Yeah.
And it goes the same for savings. All companies will take different things, will take different type of savings differently, but we can clearly see some constant in the way companies manage their savings. The elephant in the room is the impact on the P&L versus cost avoidance. This is crazy. Everybody does that, and I see some prospects, when I bring the subject to the table, you can see their relief because they were doing like that and they didn't expect me to talk about that.
Yeah.
So it's very interesting. So clearly, cost avoidance, impact on the P&L, that's the biggest thing. We're seeing some clients, some prospects that are trying to also measure cash flow improvement.
Yeah.
But this one is a bit difficult because it's more complex. It involves more people than just procurement and the stakeholder. And you need a very mature function, a very integrated procurement organization to actually be able to do that. And clearly, a lot of things are not in our hands as procurement when we try to influence cash flow.
Right.
So this is clearly something that we see, but not too often.
So does it change as, just to kind of add on a point you made there, as an organization or as a procurement organization matures, does the way that they're measuring value change as well?
To some extent, yes. One thing that is clear and that we see everywhere is that at one way or another, they are managing a sourcing pipeline. They have initiatives, they have targets, and they measure cost reduction or cost containment or whatever we do that. And then they start adding some more things. One of the things we're trying to do right now is to measure satisfaction, because when you run a project, you are dealing with a stakeholder, you are dealing with a supplier, and you need to make sure that you keep those people happy, even suppliers. Mm-hmm. And so measuring the satisfaction of a procurement process is important, and this is a completely soft measurement, but it's a very important one, because if people tell you that they are not happy with the time it takes or the way you treat some people, you're dead. I mean, you cannot progress from there, and you need to change. So we see this kind of measurement, and then there are a lot of things around innovation and CSR. And when our clients question us on that, we say, yeah, fine, we can do a lot of things, but how do you structure this kind of information? And what we really see is that it's mostly a statistical approach. In how many projects have we managed to, reduce carbon footprint or to use disabled workers? Mm-hmm. Then the rest is highly textual, yes, in the sense that you need to describe things. It's very hard to structure. So all of our clients, they struggle with this at the moment. It's very hard to really put a frame and have a quantitative approach to this kind of topics. We work a lot on that, and I hope we'll find some ways. On Procurious recently, there were a few discussions around that. That's a big topic in procurement. Yeah. But I also think that we should probably be careful in how we manage that, because, again, we cannot believe that we are strategic and that we bring innovation and CSR and a lot of intangible value if we don't deliver savings in the first place.
So, one of the things that's always been interesting to me is that we talk about cost savings, and we hear from finance, we hear from the CFOs that they can't trust the savings numbers that we report because they don't actually see them drop to the bottom line, and that's been my experience for sure. Is that something that you see?
Yes, of course, and the only reason for that, in my opinion, is that we are not aligned with finance. Mm-hmm. We are not aligned on definitions, and more importantly, we are not aligned on expectations. So when procurement says savings, finance understand visible bottom line impact, as you say. And we, that's the first step. We need to make sure that when we say a word like savings, we understand. And this needs some nuances. And we were talking about cost avoidance and P&L impact. That's one nuance. We need to agree on the rationale behind savings. We need to agree on what the company expects from procurement, because bringing one type of savings or the other is a completely different game and impact on the company. I remember we gave a training to the team. The training was in finance, and it was enlightening for them. They were finally able to understand what finance had in mind, and really it helped tremendously bring the buyers on par with finance, because they were somehow talking the same language. Mm-hmm. And it's important, because you cannot work properly together if there is a misconception or misunderstanding behind a concept.
Yeah, and something that I'm thinking back to my days as a service provider. As a service provider of procurement services, we were always measured. Our ROI was based on the savings that we brought, and so we'd have these pretty complex savings methodologies, but they were all written out in the contract, in one of our amendments to the statement of work. But it quite clearly said, in this situation, this is how you calculate a saving. This is what a saving means. This is how we actually are going to account for it as we report back to finance. And when I think of my days as a practitioner, I didn't really see that very often. You know, a couple of things. One, do you think that we should be thinking more about formalizing the language around savings and laying out up front how we would measure it so that everyone's on the same page? And B, do you see organizations you work with in practice doing that?
Yeah, so first, I think you cannot really collaborate with finance and by extension, be able to bring savings numbers that are trustworthy if you don't have a savings policy. And in the company where I come from, we had a clear savings policy, and it was so important and so well shared with the rest of the company that it was actually a group policy, meaning that there was an oversight from the board, just like you would have contractual commitment policies. So it was really official and something that could be audited by internal audit. And this is probably essential in getting finance to agree with procurement. It's make sure that you write the rules, everybody agrees with the rules, and they are public somehow. Yeah. And you cannot play if the rules are not defined. I mean, what would it be like in soccer if right. If some rule would depend on the topics and the people? No, I mean, rules apply everywhere to everyone. So setting the rule is essential to what we're doing, but we also need to understand that we're doing a job that is very complex, that depends on a lot of people, a lot of situations. The best savings policies I've seen, they only manage to cover 80% of the situation. Yeah. There are always these silly projects where things are not as they are described in the book. But again, if your policy is good, 80% is excellent. And for the remaining 20% of projects, at least you have a common understanding of how you should calculate savings. And you do that with finance. And you do this on an ad hoc basis. But again, as long as everybody shares the same view on what a savings is, you'll find a way. Yeah. I've seen some savings policy that were 50 pages, and this is insane.
Right.
What I usually recognize is five cases are okay. We have clients that have only 2. Is it an expenditure that we already incurred, or is it a new expenditure? Yeah. That's how they calculate. And some people are a bit more elaborate. Some go over the top and have 9 or 10 rules. And again, it's a balance to strike. And generally, when you talk about new project, renegotiation of existing spend, pure cost avoidance or process improvement project, and volume rebates or signing bonus, you cover most of the cases. And the rest, this can be adapted and adjusted by the people around the table.
So what about the stakeholder? What role do you think, role do you see the stakeholder playing in setting the savings methodology, let's say? Because ultimately they're the ones who, if the finance organization, I've seen in a number of cases, actually takes the money from a budget. So they're the people who are going to be impacted by the savings number that's claimed. Do you see stakeholders playing a role in determining what the savings, ultimately, how the savings are going to be measured?
So I think that there are 2 different questions in there. First is, how do you calculate savings? I'm not sure that stakeholders should have a say in that, because again, it comes from the savings policy. Yeah. And I'm not sure that you should involve everyone there. But then when you actually start counting the savings, I have one strong belief is that if the stakeholder doesn't agree with the savings, given the rules that have been set, they shouldn't be reported. So you need first to make the effort to talk with your stakeholder, get him through the results of the project, the methodology, and have him agree with that. Then the other thing that you mentioned is, what do we do with the savings? And I think somehow that this is a red herring issue, in the sense that I don't recall seeing any company where marketing has a budget of 100, you bring 10 of savings, and this goes back to a pot of gold, at the end of the rainbow.
Right.
I have never seen that. I've talked once with the CPO of a large pharmaceutical company, and they had such a level of maturity that they had managed to get a hold of that. But that's possibly the only example I know of. What we see generally is that this helps budget holders achieve more, do more things with what they had allocated in the first place. And that's what makes the discussion around impact on the P&L versus cost avoidance all the more complicated. If you don't reallocate the money, you could consider you have a real impact on the P&L. Otherwise, it's a mere cost avoidance.
Yeah, and I would always strongly recommend. So I've had instances where my finance organization or the finance organization of my clients have wanted to take money out of the pot, out of the budget of a stakeholder for savings associated with a project. And, I can't put in strong enough terms how much I encourage them not to do that, because ultimately everything we do is based on relationships. And most stakeholder groups don't come into a project with the desire to save money to reduce their budget. It's save money to make their budget go further. And so if they think that by working with procurement is going to end up, they're going to have their whatever they save taken out of their budgets, then there's no incentive for them to work with us in the first place. Yeah,
it's actually even a deterrent to actually working with procurement. So I fully agree. And again, the one thing that we need also to keep in mind is, you could spend what you have saved in something else, but there is also only so much you can spend in a given time frame. So ultimately, maybe you will bring cost savings, maybe the stakeholder will not even have the opportunity to spend that surplus. So anyway, and then this loops back to the question of spend management at large, and this is probably more something that finance and financial controlling should handle rather than procurement. I see very, very few situations where actually procurement gets to decide whether or not we spend some money. Our job is to make sure that we spend the right amount of money, but not if we spend it.
Right. And so I know that you believe that, just from what we've talked about in the past, that really the counting of the savings should be a finance responsibility rather than a procurement responsibility. I just wonder if you could kind of elaborate on that a little bit.
So I believe that we are here to negotiate the best possible agreements with stakeholders, and this includes a cost component. And this is our responsibility as procurement. Then whether or not the contracts will be applied, whether or not the supplier applies the right prices, this is somehow beyond our control. And so I have a belief that we should report on savings. There should be some scrutiny, some validation around those numbers. But the notion of realized savings is something I don't like so much, because so many things could go wrong or differently than expected. That savings may not realize as expected, but yet the performance of the procurement team remains the same. If the activity goes up or down, you will not spend the same volume than you expected. If there's a currency issue, your savings might not realize as expected. So a lot of things that are beyond the control of procurement. And I think that on top of these factors, there is one that we see in the few companies that we know that actually track realized savings. It's that it's just massive effort, and you need people and you need tools to actually reconcile some plans with what you have in your books. And if you buy 100,000 widgets or expect to buy 100,000 widgets, the effort, the workload, the energy that you need to spend counting bins and saying that we've actually purchased 9,900 and 500 widgets, it's not worth the effort.
Yeah, and my experience has been with realized savings is that was the only way that a CFO would take the numbers that we report seriously. Because, especially in services, services is so difficult to really determine exactly what level of savings are. But on the flip side, the effort that goes into essentially going into the line level detail at every single invoice and trying to tie that back to with a line item that you've negotiated on a contract it's not impossible, but it's a huge undertaking. Is there a middle ground?
I believe there should be a middle ground. And again, the first assumption is that you have a proper line of communication with your CFO.
Yeah.
And those people that are extremely pragmatic usually. And if you explain to that person that, you need 3 people to actually reconcile everything, and that overall you might see a 5-10% difference over time in what you claim versus what was realized. And maybe those 3 people, they could be used to something more meaningful, managing relationships, handling more projects, putting more spend under control. I think this has a lot more value to the organization as a whole, rather than just checking that things we decided or planned a year ago have actually realized. I mean, unless we are fortune tellers and believe that we can predict the future, I don't think it's worth it doing so. But as you mentioned, when you are a service provider, and especially in the BPO field, realized savings are a thing, and that's generally the only way to actually get payment for your services.
Right, or justify the ROI.
Yeah, but again, I think I've talked with a few large BPO providers, and they needed to allocate a lot of resources on that. And again, this was just bringing the cost up just to check that things were really happening. And anyway, if they were not happening as planned, it's possibly because the client did not make a purchase or because the activity went down. So nothing that was, again, in control for the service provider.
Yeah, and it's an interesting question as well of whether realized savings, or the concept of realized savings, was used as a sales tool to sell to the CFO the fact that he can get confidence, or he or she can have confidence in the numbers that are reported versus it being particularly practical from a procurement perspective.
I actually, the discussion I had with the BPO provider, they actually told me that it was a deal breaker if they were asked to be paid on realized saving, except they were given full control of the whole chain,
right,
from sourcing up to fulfillment of the orders and matching of the invoices. Because otherwise, I mean, it's just not manageable.
There's too many variables.
And again, it's not for me, it's not a sales argument, except if you consider that this will give you the means to get a much bigger deal in scope. But I don't think it's a sales argument, or at least not anymore.
So you come into a new client and you have a blank sheet of paper in terms of how you really plan out how savings are tracked and measured, and who's responsible for what in that process. What would that look like?
So first, there would be an introduction to put things into context and explain why we're tracking the concept of savings, what it is and what it is not. Just to make sure that people are aligned on that. And this is very important to manage expectations on this one. Because, some things will be considered savings or cost avoidance, but they may not be visible in the books. And that's okay as long as we all understand what we are talking about. Then the other part would be outlining the, 3, 4, 5 rules or main types of situation that can occur and how you would reconcile and, at least calculate the savings. The typical example is when I'm renegotiating an existing spend, how do I determine my baseline to calculate the savings? Some companies will say that's historical price times historical quantities. Others will say it's historical prices times forecasted quantities. For me, there is no absolute truth in there. It's just the result of a discussion with finance and a common understanding of what is relevant for the organization. So defining the rules, and clearly, I think that the most important one is how do we agree on the baseline? Because ultimately, the savings are just a function of the baseline. And if you manage to get this right, your savings policy will be in good shape. And the last element I would include in a savings policy is how do we verify or validate the savings? And I'm very much in favor of a 2-steps approval. First one with the stakeholder, because it's a good way to have more conversation with the stakeholder, discussing with him, educating him on what we do. And clearly, if you negotiate something with marketing and they don't agree, there's no point in claiming those savings. So you first need to agree with the stakeholder and make sure that they agree with what you say. And then, periodically, you would meet with finance and go through the list. And I'm convinced that this should not be an automated workflow type of thing. take this opportunity to have conversation. And what we see with all of our clients is when they talk with finance, do a review, a monthly or quarterly review of the projects, they learn things. They find different approach. They imagine new ways of working or optimizing spend beyond smashing the suppliers to reduce the. So, I mean, and in French we have something that say that out of discussion comes the light, and I'm a big proponent of this kind of thing. We need to talk with as many people as we can and as often as we can, because that's how we'll progress as a function, and that's how we'll get our recognition.
So I have one last question on the concept of savings and procurement math. And you said earlier, you made a comment that 80% of circumstances, you can plan for, you can account for, you can have a methodology for, and 20%, it's really a case-by-case basis, very situational. I was wondering if, out of that 20%, if there's particular categories that lend themselves to you really having to figure it out on a case-by-case basis.
I can see mostly two cases. One is category related, and the one that comes to mind for me is real estate. Mm-hmm. Because when you buy or rent a location, there might be something like waiver of rent for a few times. You might need to do some refurbishment work when you enter or exit the building. So this can get quite complex, and maybe you can find a way to find a common rule for that, but they are very often very specific.
Yeah.
The other thing I can think of is usually around outsourcing, because there might be a lot of things. First, you're comparing something that was delivered as a service internally versus something that you will pay someone to do.
Yeah.
So it's very difficult to build a baseline. There might be some investment or capex considerations. You might have to buy some things, and clearly there's the human or people component. When you outsource something, well, you generally get rid of some headcount, and all of that makes a very complex situation. And the good news is that usually you have to build a very strong and detailed business case, and that should be probably taken as a basis for reporting on the savings. That's the two main situations where I see ad hoc calculations to be relevant and mandatory.
And do you find that when there are ad hoc calculations or there are methodologies that aren't necessarily standard, are those agreed up front at the beginning of a project, or is that best practice, or is it get the bids in and then we'll figure out how to calculate it just based on the inputs?
So again, except in some situation where you can anticipate things that will be complex and difficult, you can already consider that upfront that the savings methodology will be ad hoc. Mm-hmm. I'm not sure that you can already agree on the calculation beforehand, and the extension of that statement is possibly that sometimes some supplier will bring a very innovative or different approach or solution to your needs, and this will basically involve a paradigm shift, and so you can really not compare apple with apples with the previous situation. And so in this case, you cannot anticipate this because this would come from the market itself.
Right.
And then you need to agree after the fact.
Yeah, well, I always like to leave listeners with a takeaway, and sometimes it's just reinforcing something that you've said during the interview. But my last question for today was, of everything we've talked about, what's the single most important thing that a procurement leader could do to increase the confidence that finance or the CFO or whoever it is that's managing procurement's performance has in the savings number that we present?
I would say that the single most important thing would be, do not try to inflate your numbers. Mm-hmm. Always be on the cautious or conservative side of the numbers, because otherwise people will not believe in what you say. And the corollary to that is that you need to be extremely transparent in how you build those numbers and how you achieve them. And if you are transparent and give a conservative view of numbers, people believe you, and this will be a much better place to be in.
Mm-hmm. So If listeners would like to learn a little bit more, to reach out, continue the conversation, where would be the best place for them to find you?
The best place to find me would be on our website, per-angusta.com, and clearly they can reach out to us through our blog or through LinkedIn or through email. And that would be a pleasure to have a conversation with them.
Okay, great. So what I will do is I will link up to your blog and to the Per Angusta website along with your LinkedIn profile at the show notes for today's episode. And those show notes are going to be at artofprocurement.com/savings. That's artofprocurement.com/savings. So just once again, Pierre, thank you very much for your time today.
Thank you, Philip, for having me.
All right, you're welcome. Thank you. Thank you for listening to another episode of The Art of Procurement. To find an archive of all past episodes, you can go to artofprocurement.com/episodes. And to ensure you never miss another show, go to artofprocurement.com/subscribe.